Hello, Clive Tompkins reporting for the Finance News Network. Joining me from Fairview Equity Partners is Executive Director and Portfolio Manager Chris Adams. Chris, welcome back.
Pleasure to be here.
The Fairview Emerging Companies Fund is a smaller companies fund. Where do you look for your investments?
We look for any companies which are outside the top 50. We can't invest in top 50 companies. And any companies with a market cap of about 60 to 70 mil. Anything below that's a bit too small for us. We don't rule out any potential sources. We go to a number of presentations, site visits, and we have a number of companies come through our offices. Over the reporting season, we would have had about 60 to 70 companies come through our office. We'll read all the financial press and we'll take a tip from anywhere we can find it.
Thanks, Chris. The fund aims to identify companies yet to be fully discovered by the market or underestimated. Can you give us an example of one such company within your portfolio?
Yeah, look, a classic example of a company like that is a company called Vita Group. VTG is the code. They're not covered widely by the investment broking community. I think only one or two brokers cover them. Market cap's about 100 mil. It's on a very cheap multiple for its growth prospects, on about 10 to 12 times. And this company's got a lot of growth from rolling out Telstra stores. They've got about 90 Telstra stores and they're going to take that over 100. And they sell Apple products, mobile products, fixed broadband, etc. It's a high growth segment as well. And we think that's a very exciting growth company opportunity.
Chris, how has the fund performed over the September quarter and further back?
Over the September quarter, we're about 1% ahead of our benchmark, which is reasonably consistent with our longer term objectives of adding about 4 to 5% per annum over the benchmark. Over the longer term, we've done a lot better than that. We've added about 15% before fees per annum since our inception.
And Chris, which stocks have been standout performers in recent times?
The stocks that have really performed well over the last quarter and a bit have been technology stocks. And we certainly own a lot of those in the fund. Examples of that are VTG, which I mentioned before, Infomedia, which is an electronic parts software cataloguing firm, Nearmap, which does aerial photography, far more advanced than Google Maps, for instance, and a couple of ag stocks, Select Harvests, which is primarily almond manufacture and distribution. And the almond price has been very strong, and that's driven a very strong re-rating in the Select Harvest price. Other than that, there haven't been any obvious pockets of strength.
And Chris, the fund has about 60 positions within the portfolio. Which sectors are you weighted towards?
So the sectors we're weighted towards, as I mentioned before, technology, also healthcare, we're pretty strong on, and Certex is an example of a company we own in that space, as well as Alchemia and Main Distribution. The other sector we own at a reasonable weighting is the retail sector. We own a number of selective retailers, including Flight Centre, Beacon Lighting, Vita Group, which I mentioned at the start of the interview. They've got some good, strong stock-specific characteristics which we like. We don't particularly like the discretionary aspects of the retail sector, but there are some good companies within that sector that we're attracted to.
And on the flip side, which sectors are you steering away from?
Yeah, the clear area of concern for small caps is any mining-related companies. And we've seen how weak commodity prices have been of late. And we're seeing announcements almost on a daily basis now of the big mining companies cutting back their capital expenditure. And BHP said the other day there'll be no major new mines in coal for a number of years, and that's being replicated elsewhere as well. We've seen a number of huge profit warnings coming out of mining services related stocks. We saw Ausdrill the other day knock their earnings back by another 30 to 40% after a series of downgrades prior to that. Some of these companies are now having very stretched balance sheet concerns, and earnings have plummeted to sort of very minimal levels. We own very little in that space.
Last question, Chris. Equity markets have seen some turbulence recently. What's your outlook for small caps over the next 6 months?
We think the outlook's reasonable. Valuations are more supportive now after the retracement we've seen in the last couple of months. Small cap industrials on about 13 times now, having been up to about 15 times a few months ago. So that's somewhat more appealing. But the earnings outlook is still challenging. We've seen a number of profit warnings lately. I talked about mining services, still a reasonable component of the benchmark. Retail's a big component of the benchmark, and we're seeing some pretty soft consumer spending coming through. But there are a number of IPOs coming through which seem to be more attractively priced now. And as I mentioned during the interview, there's a number of interesting stock-specific examples which we're still pursuing. So we think it's a reasonable outlook for the small companies benchmark.
Chris Adams, thanks for the update.
It's been my pleasure, and thanks for having me.